Hello, everybody, and welcome back to another episode of the Rogue Agent Answers. My name is the Rogue Agent. Some people call me David Lewis, and every week I answer one of the many life insurance related questions that I've received from clients, from email subscribers on the daily email list, questions floated to me from across the interwebs, in the comments sections, which I know you're not supposed to read, or just interactions that I've had with people in real life over the past 20 years, which is a long time. And some of these questions I just scribbled down on scrap pieces of paper. Some of these are stuff I've written down on my phone. Some of it is on Post-it notes scattered all over the office. And every week I answer one of those questions. So if you'd like to ask your question, drop them in the comments section or join my email list for more life insurance tips and advice at monogenics.com. monegenics.com. And now for this week's question. What is the chronic illness rider on my policy? How does it work? So the chronic illness riders on permanent life insurance policies are basically a way for the life insurance companies to offer policyholders living benefits, specifically the option to spend down part of their death benefit before they die. These riders they're triggered after the insured has developed some kind of chronic illness. And that typically is defined as a permanently disabling event. So it could be like a stroke or a heart attack. More commonly, it's kind of meant to mean like the needing long-term care. So if you can't do, I think it's 2 of the 6 activities of daily living, essentially you can't take care of yourself, and then you'd qualify for this rider, and you could be triggered, and then you can start spending down part of the death benefit. And that money could be used for anything really, but the way the rider is set up, it's designed so that you can use the money to pay for long-term care expenses. Again, you could use the money, I think, for anything. I don't think there's any restrictions on most of these. And then, of course, there's a charge to use the rider when it's triggered. It's usually a small fee. I think it's like, and for most policies, most carriers I've seen, it's like, maybe $100, maybe $200, or maybe $250 or something like that. Relative to what the benefits you're getting, it's really small, and it's a one-time thing, and that's just to activate the rider. So, but anyway, it's designed to provide insurance coverage for chronic illness. So when the insured is diagnosed with a chronic illness, that creates a permanent disability that the insured is not expected to ever recover from. And that's when the rider is triggered. The policyholder may spend down the death benefit before they die. So each company sets the terms and conditions for its chronic illness rider, as long as it's in compliance with various insurance regulations, IRS regulations. So if you're not familiar with how these work on a policy, if you have a policy with chronic illness rider, that's something you want to check in your policy contract. It's kind of a hidden gem that a lot of policyholders either don't know about or have forgotten about, it's on most permanent policies. Whole life insurance kind of hit or miss. There's some carriers that are really good about it and they include it on their whole life, and others don't. Usually, the top tier carriers will include it on their policies, where you see like sometimes like if you have, I don't want to say like second tier, but there's smaller insurance companies may not have it, or may have very limited versions, or it may, they may have an extra charge for it or something, or have certain conditions on it that make it not as attractive. And it's on most, if not all, universal life policies have something like this. Not everybody qualifies for chronic illness riders. It's usually a free add-on. So people tend to think that because it's free, and carriers typically do not charge for it, that it just comes with everything. There's certain conditions on that. If for example, some insurance companies won't issue a chronic illness rider if you are table rated, meaning you have a substandard risk rating. Or if you're under a certain age or you live in certain states, sometimes state regulations have limits on policy, age limits on what policies can come with these riders. So don't automatically assume that if you buy a permanent life insurance that you're getting the chronic illness rider. It's also, the other thing to realize is chronic illness riders are not the same thing as long-term care insurance. People tend to hear, because it's chronic illness and you can use it for long-term care expenses, people tend to think that, it's a replacement for long-term care insurance. It is not, and it's not designed to be. However, it is an alternative to buying long-term care. It's not necessarily a replacement. I wouldn't say, get this instead of getting long-term care insurance. If you have a real need for long-term care insurance, that's what you buy. However, if you don't know that you really want to spend the premiums on long-term care, or or you're okay with some of the limitations. In other words, with long-term care insurance, it doesn't need to be permanently disabling. So you can use your long-term care and file a claim, on a policy, and it could be temporary. It could be you need skilled nursing care or help, with long-term care needs. And long-term care doesn't necessarily mean you have dementia. It could be you got into a serious car accident, can't take care of yourself. It could be that you have a physical disability that is not permanent and that you're expected to recover from. Long-term care can pay for those things. You file a claim, you can go on claim, then you can go off claim. But with chronic illness, you go on claim and you're expected to stay on claim and not recover. So this is not one of those things where you go on claim, off claim, and you can kind of bounce on and off and then get money as you need. This is more of, you have this disability, you're not going to recover from it. This basically is here to kind of as a backstop. You can use your insurance policy to shield your other savings and spend down the insurance policy instead of having to spend the cash in investments or sell your house or whatever to pay for expenses that you are starting to incur before you die. It's insurance, life insurance. At its core, it's still life insurance, but this is acting more as a shield for your other assets, with the provision that this is a permanently disabling event or condition. All right, that's it for this week. I will see you next week with another question. Until then, keep paying those premiums. Okay, that's it for this week's question. If you'd like to add your question to the list, just drop them in the comment section or send me an email. And if you want more life insurance tips and advice, just head on over to monogenics.com, monegeniix.com, and sign up for my daily email list.